Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Jubilant Ingrevia Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pavlin Singh Taneja, Associate Director, Investor Relations, Jubilant Ingrevia Limited. Thank you, and over to you, sir.
Thank you so much. Good evening, everyone. Thank you for being with us on our Quarter 4 and Financial Year 2022 earnings conference call of Jubilant Ingrevia Limited. I would like to remind you that some of the statements made on the call today could be forward-looking in nature, and a detailed disclaimer in this regard has been included in the press release and results presentation that has been shared on our website. On the call today, we have Mr. Shyam Bhartia, Chairman, Mr. Hari Bhartia, Co-Chairman, Mr. Rajesh Srivastava, CEO and Managing Director, Mr. Prakash Chandra, CFO, Jubilant Ingrevia Limited, and Mr. Arvind Chokhani, Group CFO. I now invite Mr. Shyam Bhartia to share his topics.
Thank you, Pavlin. Good evening, everyone. Welcome to the Q4 FY22 earnings conference call of Jubilant Ingrevia Limited. We are pleased to announce that we have delivered a record financial performance during FY22, despite facing severe second wave of pandemic at the beginning of the year and headwinds and volatility in the key input raw material and energy prices since last 3 quarters. We also maintained steady growth in Q4 FY22. In our specialty chemicals segment, we delivered a strong growth led by healthy demand across industry segments. We are pleased to share that we have successfully commissioned phase 1 of diketene and derivatives manufacturing facility at our Gajraula location. In nutrition and health solutions, we improved our profitability due to high price realization and improved volume growth in North America. In chemical intermediate segment, we continued the higher sales with pharmaceutical and agrochemical customers and recorded healthy growth in EU. Though the profitability of acetyl business during Q4 was impacted due to sharp and consistent correction in acetic acid prices impacting our inventory, the overall impact of acetic acid price on the profitability for the full year FY22 was not significant. Our business team continued to work closely with our customers to ensure that the increase in input cost is passed on quickly, while our supply chain team ensured the uninterrupted supplies and timely deliveries. Due to advancement in our new product pipeline and CDMO projects, we are pleased to revise our investment plan for growth projects to rupees 2,050 crores. Out of this, we have already committed investment in projects worth 800 crores till date, and now we plan to invest about 1,250 crores to be committed between FY23 and FY24. These investments will be funded through internal accruals, and all the new facilities should be ready for operations by FY25. We are also glad to share that the board has recommended a final dividend of 250%, that is 2.5 per equity share of the face value of rupees 1 each for FY22. This shall result in a cash outflow of 39.8 crores. During the year, the company has already declared an interim dividend of 250%, that is 2.5 equity share of rupees 1 each, and the total dividend for FY22 works out to be 500%, that is 5 per equity share of rupees 1 each, amounting to 79.6 crore of cash outflow. We remain fully committed to the growth aspirations for the company and excited to realize the opportunities going forward in all our business segments. With this, I now hand over to Rajesh to discuss about the business in detail.
Thank you, Mr. Bhatia. Very good evening to all of you. At the onset, I hope you all and your loved ones are safe and healthy. I would like to welcome you all for joining us for Q4 FY22 quarterly investor call of Jubilant Ingrevia Limited. It gives me immense pleasure to report a healthy financial and operational performance of Jubilant Ingrevia Limited for the fourth quarter and for financial year ending 31st March 2021. Revenue during the quarter was 1,296 crore, indicating a growth of 20% year-on-year, driven by 35% growth in specialty chemicals, 18% in chemical intermediate business, earlier called as life science chemicals, and muted 3% growth in nutrition and health solution segments. EBITDA at rupees 152 crore is 25% lower, mainly due to impact of acetic acid price on our inventory. However, overall impact of acetic acid price on profitability for full year FY22 was not significant. Sharp increase in key input prices for specialty chemicals and nutrition and health solution segments were partially passed on successfully by end of quarter. We have ensured to maintain our per ton margin in chemical intermediate segment. We are happy to inform you that Jubilant Ingrevia has recorded the highest ever revenue of rupees 4,949 crore and highest ever EBITDA of rupees 863 crore in FY22, which is a growth of 42% and 38% respectively over previous year FY21. We continued our focus on commissioning the ongoing CapExes along with the debottlenecking of capacities for existing products and successfully commissioned phase 1 of diketene and derivative manufacturing units at our Gajraula facility. As we have informed you in our earlier calls, we have also commissioned our food grade acetic acid plant during present quarter, that is Q1 FY23. In this plant, we will produce acetic acid from renewable feedstock based green ethanol. We continue our focus on business excellence for continuous improvement in processes and achieving cost efficiencies along with the scaling up of our production volume successfully. Global logistic challenges continue. However, our supply chain team ensured on-time deliveries to our customers, leveraging our large volume and long-standing relationship with shipping and transport companies. Now let me take you through the updates on all our three business segments. Specialty chemicals. Specialty chemicals revenue during the quarter grew by 35% on year-on-year basis, driven by higher volume across the product segment. Sales to agrochemical customer during the quarter grew to 37% from 28% earlier, and sales to nutrition customer also improved during the quarter. EBITDA during the quarter increased by 17% on year-on-year basis, while EBITDA margin decreased to 18.2% from 21.1% in Q4 FY21, mainly driven by higher input costs, which we are in the process of passing on. Specialty chemicals overall revenue for FY22 grew by 24% over previous year FY21, mainly due to volume growth of 16%. This growth has come both from domestic market as well as from international market. We witnessed positive traction of demand from both domestic as well as international customers across the region and industry segment. We are witnessing positive of demand in CDMO business as well. During the quarter, we have signed a 3-year CDMO contract worth rupees 270 crore with one of our innovator pharma company of international market. Our new product pipeline, especially specialty chemical, is quite robust, and we are working hard to expedite and bring them to commercial scale after thorough process development, optimization and scale-up. Nutrition and health solutions. Nutrition and Health Solution business during the quarter recorded modest growth of 3%, driven by higher price and increased share of North American market to 19% as against 14% last year same quarter. Our focus to maximize niacinamide share in niche segments like food and cosmetics is giving positive results. During the quarter, volume in food and cosmetic segment grew significantly over last year's same quarter. EBITDA during the quarter grew by 18% on year-on basis. Also, EBITDA margin during the quarter was higher by 308 basis points at to 24.4% versus 21.4% over previous year in FY21 due to better price realization. Nutrition and Health Solution overall revenue for FY22 grew by 22% over previous year FY21, mainly due to volume growth of 9%. Revenue in North America and European Union grew significantly by 78% and 65% respectively. Food and cosmetic revenue has gone up significantly with 48% and 56% respectively. We continue to focus on improving our market share in niche segments like food and cosmetics and to enhance our market share in North American market. Animal nutrition business continues making efforts to increase share of specialty premixes through various initiatives. Chemical intermediates. Let me first of all inform you all that we have renamed our life science chemical business segment to chemical intermediates. This new name appropriately represents the product and business we do within the business segment and is in line with the industry understanding. Revenue of chemical intermediates during the quarter grew by 18% on year-on-year basis. This growth was driven by higher price of acetic anhydride and ethyl acetate, mainly due to higher price of feedstock. Revenue during the quarter from Europe and Japan has gone up significantly on year-on-year basis. EBITDA was impacted year-on-year basis mainly due to impact of acetic acid price on our inventory, led by sharp correction in acetic acid price during the quarter. However, overall impact of acetic acid price on profitability for full year FY22 was not significant. EBITDA margin stood at 4.6%. Overall revenue of chemical intermediates for FY22 grew by 61% over previous year FY21 due to volume growth of acetic anhydride as well as overall price realization both in acetic anhydride and ethyl acetate. With the result, overall EBITDA also grew by 77% in FY22 over previous year FY21. Despite the challenging situation, we maintained domestic market leadership for acetic anhydride and ethyl acetate and successfully increased our market presence in Europe and Asia for acetic anhydride. Outlook and growth capex plans. All our ongoing growth-related capital investment projects are more or less on track. As mentioned by Mr. Bhatia, out of our announced growth investment plan, we have already committed capex worth rupees 800 crore so far. All plants within this committed investment will be completed and commissioned by FY24 and has a potential of incremental peak revenue of rupees 1,750 crore at current prices. As mentioned in our last call, we have reviewed and summed up our additional growth capital investments, and we are pleased to inform you that during FY23 and FY24, we plan to commit additional capex worth rupees 1,250 crore to expand our newly added chemistry platforms like diketene and agroactives and further strengthen our leadership in chosen area of product portfolios, including the CDMO projects. In addition, we plan to enter into fluorinated derivatives, fungicides, which are agroactives, and grain-based specialty ethanol as new business platform. We plan to complete and commission all these new plants within by FY25 and has a potential to bring incremental peak revenue of rupees 2,750 crore at current prices. We are happy and excited to inform you that after completing this overall growth-related capital investments of total 2,050 crore, at their optimum utilization, Jubilant Ingrevia is aspiring to achieve overall annual revenue of rupees 9,500 plus crore, which will also improve revenue mix of specialty and nutrition segment together to 65% from 46% in FY22 and is going to be the key driver for overall margin improvements of Jubilant Ingrevia Limited. Estimated cash outflow of FY23 will be around rupees 550 crore, and for FY24 and FY25 will be rupees 650 crore and rupees 600 crore respectively. These capex cash outflow are intended to be funded through internal accruals along with the reduction in debt. With this, I now hand over to Prakash to discuss the financials.
Thank you, Rajesh. A very good evening to everyone, and thank you for joining us on Q4 FY22 quarterly earnings conference call. I would now highlight the company's financial performance during the quarter ended 31st March 22. I would like you to recall that life science ingredient business of Jubilant Pharma was demerged into Jubilant Ingrevia effective 1st February 2021. And in previous year FY21, our published results comprised only 2 months of operation in Q4 as well as in full year corresponding previous period. To provide proper comparative picture of the operations of the company on continuing basis in investor presentation, the results for the previous periods have been presented on pro forma basis by combining the corresponding previous period numbers from the published results of discontinued operation of LSI segment of Jubilant Pharma Limited. The details in this regard are provided in the investor presentation as well as in note 5 of our published results, and we would request you to go through the same. Revenue from operations during Q4 FY22 increased to 1,296 crores as compared with 1,078 crores in Q4 last year, with a growth of 20% on year-on-year basis. Similarly, revenue from operations during financial year 2022 was at 4,949 crores as compared with 3,491 crore during financial year last year, witnessing a growth of 42%. The EBITDA during the quarter declined to 152 crores as compared with 203 crores in Q4 FY21, witnessing a decline of 25% on year-on basis. The margin stood at 11.7% in Q4 as against 18.8% in Q4. The main reason for the decline was impact of sharp decline in acetic acid price on inventory, which has already been explained by Rajesh. EBITDA for FY22 was at 863 crore as compared with rupees 627 crores during FY21, with a growth of 38% as compared to the same period last year. And EBITDA margins were at 17.4% during FY22. Depreciation and amortization expenses during the quarter was at 31 crore. Finance cost during the quarter was significantly lower at 6 crore versus 12 crores in Q4 FY21, a reduction of 49% year-on-year on account of repayment of debt as well as lower interest rate. Tax expenses for Q4 was at 46 crores on account of lower profit. The cash tax remained 17.6% during FY22. PAT during the quarter was at 69 crores as against 95 crores in Q4 FY21, witnessing a decline of 28% year-on-year basis. PAT for FY22 was 477 crores as against 316 crores PAT in FY21, a growth of 51% as compared to the same period last year. The gross debt was reduced by 319 crores during FY22. Gross debt as on 31st March 22 stood at 229 crores as against 548 crores as on 31st March 21. Similarly, company's net debt stood at 181 crore as on 31st March 22, a reduction of 251 crores from 31st March 21. Net debt to EBITDA ratio further improved to 0.21 times from the earlier level of 0.69 times as of 31st March 21. The closing blended interest rate for Q4 was 5.73 as against 7.01 in Q4 FY21. I'm also delighted to share that CRISIL rating has revised its outlook on the long-term debt of Jubilant Ingrevia to now positive from earlier stable, while reaffirming the rating of CRISIL AA in May 22. The net working capital percentage to annualized turnover and number of days for working capital on the basis of FY22 annualized turnover were 16.2 and 59 days respectively, and the increase in working capital was primarily driven by higher revenue and higher raw material prices. The capital expenditures during the year was 235 crores. With this, I would like to conclude the opening remarks, and we will now be happy to address any questions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Veera from Bacchus. Please go ahead.
Hi, sir. Just wanted a breakup of this 1250 crores incremental investment that we have discussed. What is the breakup of this between CDMO and special expenses? Any other breakup that you can share? And ethanol.
Yeah, so if you see the slide before, the earlier slide, specialty chemical is 750 crore, nutrition and health solution is 200 crore, chemical intermediates is 300 crore.
Okay, and within this capex that we announced, which part of the specialty will be going for that fluorinated derivative?
Yeah, so that is something which is currently very difficult to estimate. So we are not giving the plant-wise estimation of CapEx investment.
Okay. And sir, can you just throw some light on the fluorinated derivatives? Like what kind of chemistry? Because we don't have the capability in the sense we never handle the fluorination chemistry, till date. So what is the thought process? Where will we source the raw materials?
So if you recall in the earlier calls also we have explained that we have a plant of fluorination where we are using HF and we are making the derivatives of fluorinated derivatives which we want to further expand because the fluorination derivative demand is going up.
Okay. Fair point, sir. Yeah, thank you.
Thank you. The next question is from the line of Siddharth Gadekar from Equirus. Please go ahead.
Hello.
Yes.
Hello. Yeah.
Yeah, we can hear you.
So can you elaborate on the sharp jump in other expenses during the quarter?
Okay. Siddharth, the other expenses in this quarter, so there is one reclass also in other expenses. So the delta impact, if you are comparing it with Q3, the delta impact of one reclass is about 10 crores. This was earlier sitting in other expenses, which now got shifted to other operating income. So you would find a corresponding increase in other income also.
Okay.
Other than that, the other expenses have increased primarily due to the higher freight expenses, and as the year end, there are certain write-offs also.
Okay, got it. So, and secondly, now in terms of acetic acid, given that even acetic acid prices are further down versus 4Q average, so one, could we see some more inventory loss in the first quarter FY23? Secondly, given where crude prices have moved, so where do you see acetic acid prices will take a support, given that we are very close to the cost curve currently?
So acetic acid price are more or less similar range as it was closed in the last quarter. There has not been major change in acetic acid prices in this quarter, current quarter.
Okay. So, and in terms of cost pressure on acetic acid, given that crude prices have gone up, so do we see that we are near the bottom in terms of acetic acid prices?
No. So acetic acid prices are already at a higher level. So they have adjusted to the cost increase which has happened in the crude and other raw material.
Okay, sir, got it.
Yeah.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss. Please go ahead.
Yeah, hi sir. Good evening and thanks for the opportunity. Sir, a little bit more about the capex plan. So you were talking about another 1,200 crore rupees further investment. It seems that you are seeing a very favorable industry scenario to increase and almost double the capex plan within a year after the demerger of the company. So sir, this optimism which you are seeing is basically coming from the client coming more aggressively in terms of asking you to increase the supplies, or more number of inquiries which you are seeing in your CDMO projects, or also even on a fluorinated derivatives. Just wanted to understand a little bit more about the optimism in the capex which you are seeing right now.
Yeah, so it is basically the few things. Number one, as we explained earlier, our existing customers are asking us to develop new products and supply them. That is one. Number two, our existing products, we keep doing value addition in our existing product range. So therefore, the investments are required for making those derivatives value-added products. And third, there are new platforms which we have been working on in R&D for many years, almost 3 to 4 years in the past. Those are now being implemented one by one. And of course, that is based on the customer demand. So everything is driven from the customer demand, whether it is value addition of our existing product or customer requirement or the new platform.
Right. And sir, your earlier investment plan was close to 950 crore, right? Out of that 950 crore, you mentioned that 800 crore has been invested. How much investment has gone in cash outflow in FY22?
So FY22 cash outflow is close to 243 crore. And because most of the capexes have been approved during the year, and cash outflow will mainly now start happening in this year. Some of the projects which have been completed.
Right. Yeah. So board has approved 950 crore capex so far now, before today.
No,
right?
No, the board has approved so far 800 crore as we told you. Committed means it has been approved. Yeah.
Okay.
And but out of 800 crore, yeah, some are still on the way. They are ongoing.
Correct. So out of 800, 243 has been spent in FY22, and rest all will be spent in FY23. Balance close to 550 crore, right?
Correct. You are very right. You are very right.
Okay. Now on this additional 1250 crore, you expect 650 crore and 600 crore in 22 and 23.
No, you are looking at two numbers. 800 and 1250 is the investment number, and 240 and 550 are the cash flow number.
Correct. So what will be the cash flow when we are talking about another 1250 crore new capex which you are looking and which you have raised?
So if you see the total cash flow,
right?
Yeah, if you see the total cash flow in the same slide, it is given 550, 650, and 600 for 3 years.
Okay.
Yeah. If you see all the three numbers, that is the cash flow of 1250 plus 800.
Got it, sir. Sir, on this specialty chemical business, you mentioned that the volume growth for the year was close to 16%. Though the prices has gone up very sharply, but you also mentioned that you will be able to maintain the per kg margins, but because of the price increase, maybe percentage margins will look down. So do you see that going forward with a better product mix, your percentage margins of which was upward of 20%, you will be 22 to 22% kind of range, you will be able to maintain that range, or margins will settle down at a lower level?
No. So once we bring these new capital investments with value-added products, we expect, specifically in specialty chemicals, our margins to be improving.
In terms of percentage with the current price level, wherever they are input prices.
So you are talking about So when you ask for long term, I answered you long term, but short term you are right because the current prices are high. So short term there might be impact on margins.
Okay, and you also mentioned that there has been some delays in passing on the input prices in specialty chemicals that has affected the current quarter margins.
Exactly.
So are we in position to pass on the cost increase and expect the margins to improve in near term in Q1 and Q2?
See, the input cost, which is raw material as well as utility prices, are still very high, right? And there is no settling down on the input prices. So definitely the improvement in volume and revenue will happen, but on margin, of course, it will definitely not be increasing because of high input prices.
Okay. Sir, I have a follow-up question, but I'll come back to you. Thank you so much, sir.
Yeah.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Sunil Kothari from Unique PMS. Please go ahead.
Thank you so much, sir. Very hearty congratulations for doing whatever you said during last almost 14 months. You are completing your project and you are going ahead with whatever you said. And I am sure you must, before this demerger, some 6 or 12 months back. I'd like to understand from you, sir, is during last your 24 months journey, which is from Jubilant Pharma, which are the other segments or focus area or weaknesses where you would like to, and which are the area where you feel you are becoming stronger? So during last 24 months, whatever that effort you have taken and this company has been emerging, how do you see opportunity over next 2-3 years in terms of your capability, improvement, opportunity from external point of view? Some larger view would be really helpful.
So if you see Jubilant Ingrevia, fundamentally we are a chemistry-driven manufacturing organization since the beginning of our business. All the products we have been dealing with have been the global scale products. We have been having market leadership on these products. Of course, the current situation where we are seeing a positive environment towards the demand, specifically coming to India side, we are using our chemistry capability and manufacturing ability and also the R&D capability to develop quickly the products which are required by our customers and place in the market quickly so that we can capture the opportunity in the market. So you are right that having a strength in our chemistry and manufacturing, we are in a position to take up the opportunity quickly which are available in the market.
So, sir, which are the area where you feel you have scope to improve productivity, maybe cost reduction, and effect of those all efforts and value addition and improvement? Aspirational margins would be 20%, maybe over a year or 2, combined EBITDA margin?
If you see, let's say 3 to 4 years of origin, we have shown in our investor presentation also, we are moving towards a higher percentage business of specialty and nutrition health solution, which will definitely secure our margin situation better than what we are having today. Because we will be moving more business share from specialty and nutrition segment. We have also explained that in our investor presentation if you see.
Yeah. So, sir, any area where you feel you require to be yet improve upon in terms of internal efficiency, costs and productivity? Would you like to talk anything on internal your ability?
Okay, so there are 2-3 areas which we are focusing very heavily on. One is definitely the sustainability and safety in our operation. Number 2, ensuring that whatever we are planning, it comes on time. We can deliver the project on time. Of course, number 3, as you have been saying, closely look at the cost and continuous improvement to make sure that we are competitive in market.
Right. So my last question is little near term. In very well explained normalized margin for this acetic acid related segment, chemical intermediate. Should we expect that normalized margin to be achieved year on year, maybe full year, not on a particular quarter basis. But next year, we expect around 13-14% EBITDA margin from that segment?
Again, it is very difficult to give a number of percentage of margin. Again and again, we keep saying we can assure the per ton or per kilo profitability of acetyl products, which we will continue to even do some improvement in that. We can't really make a commitment on EBITDA margin because that is the factor of our price of acetic acid and price of other raw materials. So it's very difficult to give that number. But yes, we can assure you that we will grow in volume and we will make sure that we get our share of per kilo margin, specifically on chemical intermediate business.
True. Congratulations again for such a very extensive effort to explain and doing this type of presentation. Congratulations again. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Dhaval Shah from Swan Investments. Please go ahead.
Hello.
Yes, we can hear you.
Yeah, hello, sir. So good to see the new capex announcement from the discussion we had earlier. Sir, a couple of questions. First is, we had mentioned earlier also about this fluorine chemistry, and now you've given in the press release. So, is it coming out of our? So, do we have any sort of more firm commitment from the customer that 2 years down the line or 1 year down the line they would be, buying this product, or you'll be developing first and then showcasing to the customer, and then and like so just want to understand on that front. So yeah, that's my first question. Then I will have a second one.
Yeah. So you are right. We are developing few products for our international customers where fluorination chemistry is involved. We have developed in R&D. We are scaling it up, and now because of the demand coming up in commercial scale, we will have to put up the commercial plant of fluorinated derivative. So yes, you are right. There is a plan. There is a thorough plan starting from R&D, scale up, and commercialization. This statement we have not given just for the sake of saying that we will put up a plant and we don't have a product. So we have a full plan for that.
Got it. Now, sir, in last 2.5 years, many companies have made plans to enter the fluorine chemistry. Now I understand this is a very vast industry and various applications and various complexity of reactions as well, depending on the capability of the company. Now, we are a new entrant, but we have a very extensive history of chemistry skill set. Which part of the chemistry, if you could quantify, are we targeting, in terms of the market opportunity? And B, given a lot of new entrants are coming in, and I assume this would not only be in India, but also globally, because fluorine is becoming very, very more relevant chemistry in the future. What is your right to win, and how do you plan to protect your turf and grow in the future? Yeah.
So basically, good question. So let me tell you that, as you know, we are very strong globally in pyridine derivatives, right? Mm-hmm. So we are very large facility of chlorinated pyridine. We have very big facility of brominated pyridines. Now the customers have been asking us to also develop fluorinated pyridines. So we have developed couple of products, and they have been successful at the small scale. We already have a small scale running HF-based fluorination facility, which has successfully delivered the product at a smaller scale. Now, because the customer demand is going up, we will have to bring a commercial scale facility of HF-based fluorination of fluorinated pyridines.
Okay. Now, this would be in terms of end use and market opportunity size, and also Are we the only one, or are there any peers in India as well as in Asia?
So we are saying that these are the products which are specifically developed for our international customers. So we can only tell you that yes, we will be either the single one or one of the couple one or one of the few ones to be supplying these products. These are not the off-the-shelf products. They are very specific CDMO type of projects.
Okay, so from the time you start manufacturing, the customer, so it's for a dedicated customer.
Absolutely, absolutely. And these are from the innovated molecules. They are not from the commercial launch or available molecules. They are more new, innovated molecules.
Okay, got it, sir. And sir, on the innovation molecule, which was my other question, now as we move, as you've given a next 5-year plan, so this entire innovator-led business would be how much of our this specialty chemical business?
So it is difficult to give you numbers in terms of revenue, but let me explain you. Today we have one non-GMP intermediate facility for CDMO. We have 2 GMP facilities for CDMO. We are recently expanding one more GMP facility for CDMO. We have a plan. If you read our expansion plan, we are going for a greenfield GMP facility for CDMO, and we are also adding 2 multi-purpose plants for CDMO. So there are a lot of new plants and facilities we are adding up for our CDMO business, and obviously you can see that these investments are not committed based on the assumptions. They are done based on the solid demand given by our customers. So you can assume that fairly the growth in our CDMO business is going to be significant in future.
Got it. And the last question, this 9,000 crore revenue, shall we, is it comfortable to achieve by FY27?
If you ask me personally, I can tell you yes. But of course, very difficult to commit anything for future after FY27. But you can assume that when we are saying once we complete these investments, which should be ready by FY25, and as we have been explaining that we don't take more than 2 years to ramp up the facility, so you are fairly good assumption you are making. So that should be possible.
So exit quarter of 25, you should have entire gross block in place. This entire capex.
Yes, that's definitely sure what you are saying. That we have given commitment also here.
Got it. Great, sir. Good luck. Thank you.
Thank you.
Thank you. The next question is from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Yes. Congratulations for detailed presentation and the queries that we are raising. Sir, if you could tell us, the as per the most dynamic reports which are coming from the world market, which are indicating or pointing towards this carbon neutralization and movement towards green chemistry or the sustenance chemistry, and moving away purely from the crude-based chemistry, which is on the forefront for last, let's say, 30 or 40 years. And we are seeing a lot of signs, where a lot of companies are demanding green chemistry products, and you have also started a movement towards that by, commercialization of this 25,000 tons of acetic acid plant, which is coming from this green route. So if you could elaborate, the broad strategy or how you are going to move towards that, because there are very few companies who are having, this kind of foresight or technology at this stage, where they can get this carbon neutrality concept which is gaining traction. So it could highlight what percentage of your business is now, from green chemistry, and maybe in next 3, 4 or 5 years, once this capex plan is fully complete, how that proportion will march ahead. So if you could highlight something on that aspect, will be really helpful, sir. Thank you.
So honestly speaking, I don't have a number to tell you what is the percentage of our revenue coming from green chemistry. We will estimate, as you have just told us, we will estimate and come back to you later. But we want to inform you that most of our derivatives coming out of our green ethanol which we are consuming. We are consuming a large volume of green ethanol to make derivatives which are used in our chemical intermediates business, in our pyridine derivative business, also in our nutritional business. So we are saving a large amount of carbon footprint. Product-wise, we have the number, but we will calculate overall as a company, and maybe in next time we can come back.
Okay, got it. And sir, the new capex that are doing almost 2,000 crores. If you could just say us what proportion of it is dependent on the green ethanol or the green chemistry side.
Okay, we will do that. We have not done that.
Okay, because that will be really helpful, sir. Because now, when we are aware that, we have also gone through the kind of projects that Reliance and the Adanis are coming up with next 3 years down the line, this green hydrogen, which could simply, eliminate, some of the companies from Indian market, which are completely dependent on, this carbon concept or the crude-based chemistry. I don't know whether you have gone through their plans and projects, but we have done a detailed analysis and very sure that 3 or 4 years down the line, few of the companies will not even exist in our country, who are totally dependent on, crude-based chemistry. So if you could highlight your thought process on that, will be really helpful. Maybe next Concall, once you come up with, you can say the broader footprint that how we are going to move towards this green chemistry will be really appreciated. And one more aspect is that, sir, you are currently sourcing your ethanol, totally from outsourced market. Are you planning something to produce ethanol on your own, because there are very favorable policies from the government side? So any thought process on that, in terms of secure the ethanol supply from a long-term perspective?
So ethanol we are producing even today, but all those ethanols we are selling to EBP program, right? And also some specialty uses of pharmaceutical and agrochemical. Sometimes we also use our captive ethanol, but yes, our volumes are very large, so we have to import.
Okay. So what proportion we are doing indigenously right now of our total requirement?
Not significant.
Okay. So in future, are we thinking of something in that regard to secure long-term supplies of ethanol?
No. Security is there. So tomorrow, if we want, we can use 100% of our captive, what we are making for ourselves. But it makes sense for us to sell the volume at a specialized usage, because we make a better quality ethanol. We make ethanol for supplying to pharma and agro. The ethanol which we are consuming is not required for that quality. So actually it makes business sense for us to produce a good, better quality to sell outside and make better margin and consume from import.
Got it, sir. Got it.
Yeah.
Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Rahul Veera from Abacus. Please go ahead.
Sir, what is the volume growth that we are expecting in the life sciences segment?
What is the volume growth?
Volume growth that we are expecting in the life science segment?
No, I'm not getting the question.
What is the volume growth that is what we are expecting in the life science or the chemical intermediate segment?
Okay, volume growth in the FY23 you are asking?
Yeah, 23.
Yeah, I think it will be in a good double-digit number.
Okay, so is it fair to assume that the EBITDA that we have done in life science 417 crores this year in FY22, that will also grow in double digits, because we are doing the calculation on EBITDA per kg basis?
Yeah, but it all depends on the market situation also, because last year, if you remember, first quarter, we had some positive scenario on pricing. So obviously, this year the projections are better, but definitely we can't commit any number in EBITDA of any business right now. But yes, you are right. Per kilo, we will, as I said, we will ensure per kilo margin we will secure.
Right. Fair point, sir. Thank you.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss. Please go ahead.
Sir, thanks for the follow-up. Sir, once again on this commodity business only, though you have in your presentation given explanation of close to 54 crore rupees kind of losses in because of the high acetic acid prices. So I just wanted to understand, sir, this volatility in quarterly numbers in our life science business or commodity business now. Is there any way to remove that, and do we have any opportunity to enter into forward contracts or have a raw material price arrangements on a longer term basis, or this business is always open to the vagaries of the rising or volatile acetic acid prices?
So we have an opportunity to do forward contract, but please remember, forward contracts are always double-edged sword, right? Sometimes it can help you, sometimes it can harm you. So with so much of experience of last 40 years, we have realized that if we can really manage our inventory very well, which we are doing today, with the kind of volume we are in, I think it is fair to be open and make sure that when there is a volume requirement, we capture the volume requirement and make sure that per kilo margins are safeguarded. I think that's the best we can do, and we have seen that has paid well. Because this quarterly change which you are finding in last 4 quarters, it's not the regular trend. This is unfortunately because of the changed global scenarios which is happening very frequently for last 2 years. This may not continue for many quarters, long time. So I think because it has happened very frequently, we have seen it very bad. But I think overall we will see that keeping it open is making better sense.
Sir, along with the acetic acid price volatility, even if we remove that and your normalized EBITDA, that also has a huge volatility from Q1, almost 157 crore to going to Q4, 84 crore. Is it because of the lower volume in Q4 and higher volume in Q1 driving the operating leverage? Or why even in quarterly on a normalized EBITDA also huge volatility?
Oh, I think if you have missed out. We have mentioned that in Q1 last year, we had a better market situation in the sense that there was one of the plant which was not operating, and therefore we had a better pricing situation even per kilo. So, but that happens once in a while, and we capture that.
That is driven by the better pricing environment.
Absolutely. So if you knock it off, it will generalize the contribution per kilo.
So would it be fair to assume? I understand that the business will always be volatile. Would it be fair to assume that close to 80 to 100 crore rupees quarterly run rate is fair enough in case of this business, irrespective of the volatility? With the kind of volume we are projecting, with the kind of per kilo margin we are talking, your assumption is fairly good. Okay. Sir, second question is on our specialty chemical.
And I'm sorry, you must remember that we are adding the further volume in this business. So the future, of course, it will improve further.
Got it.
When our new plant will come this year.
Right, sir. Right. Sir, second question is on our specialty chemical business. You mentioned that the specialty chemical business, the share of agrochemicals has gone up in specialty chemicals. I mean, what is the driving factor, and where do you see that the agro and pharma will remain the key driving factor for overall spec chem business, or some other applications are also going to drive the growth?
No, I think you are right. Our major business to the extent of 65 to 70% is coming from agro and pharma. And of late we have seen the volume of agrochemical showing a very positive trend. Pharma has been little softer growth in last 2 to 3 quarters. So these are the 2 key segments for us. Other than this, we are into antimicrobial segments and we are into cosmetic segments. So those segments are also showing a very positive trend for us. And we are also adding some of the intermediate in these 2 segments also. But still, agrochemical and pharmaceutical are going to be the key segments for us for specialty chemical business.
Fine enough, sir. So this is last from my side on a Dicotine, the plant which you have commissioned. If you can just discuss that, how it is getting acceptance from the customers and how many Dicotine derivatives we are manufacturing now. I remember our last plant visit. Thanks for that. The two Dicotine derivatives we were supposed to commission and was supposed to ramp it up in next 3 to 4 months further. So how many nicotine derivatives we are making, and if you can just give some kind of a revenue potential for them in a second half of the year?
Yeah. So nicotine derivative plant has been commissioned very well. We have already produced commercially, as you very rightly mentioned, 2 products. 2 more we are going to commercialize very soon. With these 3 or 4 products, we estimate to use our full capacity during the current financial year, which we have been talking in the range of 7,000 to 8,000 tons.
So we will achieve 7,000 to 8,000 by end of Q4 this year?
No, we will achieve during the year the total volume, not the end of the year.
Okay. And in terms of the revenues, would you like to share the 7,000 tons?
Again, very difficult, because what we are focusing on is maximizing the volumes as customer requirement and look at the margin situation of the nicotine product. So we will take the decision based on the customer demand and our profitability. So therefore, difficult to give the exact number on revenue. But volume, I can assure you, we will complete.
Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Jason Soans from Ashika Stock Broking. Please go ahead.
Yes, sir. Thank you for taking my question. This question had been asked before, but I just didn't get the correct point. So your other expenses have shot up, from around levels of 123 crores to 163 crores this quarter. Could you just please explain again? Just wanted some clarification regarding why such a sharp jump.
Yeah. So we explained this earlier also in the call. So why this expenses have gone up in this year is, one was that there was a reclass from an expense to other income. The delta impact of that is impacting. The other reason was the increase in the freight charges, and for this quarter also we had some maintenance, so that maintenance expense has come. And at the year end, whenever there is any year end, in Q4 we have certain write-offs because you do everything, your physical verification, everything. So those expenses are also there. That's the reason why Q4 other expenses are higher.
Sure. And so even in terms of the tax rate, your tax rate is to hover around 30-32%. This quarter it's pretty high at 40%. So any particular reason you want to ascribe for that?
No, our tax rate is around 30-31% because we are on the old tax regime. And the reason for that is because we still have unutilized MAT credit. So while our ETR on the PNL is about 31%, our cash tax used to be only about 17.6%. This quarter, this is a little higher, mainly on account of some true-ups that we had to take because of the changes that came in the budget. So, but otherwise, if you would see for the year as a whole, our ETR has remained 32.8%.
Yeah. Okay. So, in terms of the year as a whole, So, in terms of the year as a whole, it's around 32.8%. You are right. So, you expect it to be the same going forward?
Yeah, at least for FY23, we will continue to be on the old tax regime. So, tax ETR in PNL will remain in this range. From 24 onwards, once we move to the new tax regime, the ETR will come down to about 24 to 25%.
Okay. So currently, at least for the FY23, it will be around 32.8%. Okay.
Yeah. So it will be in the range of 31 to 32.
31 to?
31 to 32.
31 to 32. Okay. So, and my next question pertains to the capex, additional capex of 1,250 crores. You have mentioned it and you explained it pretty elaborately. But I just wanted to know, in terms of when you look at fluorinated derivatives, there are large special players in the Indian industry already. Even in terms of agroactives, you have like behemoths like PI, fluorinated derivatives. You know the names much better than me. So I just wanted to know in terms of specialty chemistry, they are doing the job for a long time. So just wanted to know what is the sense of are you looking at more volume coming in, or are you looking at your specialty being better than what they do, or you think there is enough place for everybody, to have because a lot of manufacturing definitely is coming towards India, specialty again, because there are pretty large tailwind, right, with localization and various China plus thing going on. So do you think there is enough room or enough space for everybody to, eat the pie, or what's your view on this?
I have explained this in the earlier questions. I think you have missed it. When we talked about fluorination derivative or agroactives, these are not me-too products. I have explained this earlier. We are already into pyridine derivatives business, and this fluorination is of our existing products value addition. So these are not me-too products that everybody is making, so we are also making. That is number one. Number two, most of these products we are not talking as to launch as a me-too product. These are required by our innovator international customers, which we have developed specifically for them. Even for agroactives, these are not the general agroactives. These are value-added based on our pyridine derivatives. We are developing agroactives, and therefore they are going to be specialized products which are not produced by everyone and each and everyone in the market. So these, as you are mentioning, we are not launching these me-too products. They are very specialized, though they are generally named as agroactive fungicides, so you assume that there are hundreds of companies who are making, but these are very specialized, our own pyridine derivative-based agroactives and pyridine derivative-based fluorinated derivatives.
Okay, sure, sir. So that makes sense because you have a strong...
Absolutely. Yeah, we have backward integration, we have that ability, we have global recognition on those derivatives. So now customer wants us to do fluorination also, which we have expertise now. So it's not me-too product done by everybody.
Sure, sure, sir. And so just one question I wanted to, ask you. So clearly margins here in the life science business are on a full year basis around 15%. You had mentioned earlier in calls that, it will be around 13 to 14% base margin, right? So do you expect the same to go ahead also, 14-15% life sciences overall for the annual? Because quarterly it becomes very difficult to, gauge the margin. So just would want to ask you on an overall basis, do you think 14-15% still holds for life science or chemical intermediates as you have renamed it?
Yeah, I mean, again, you missed it, what I have explained earlier on this, that if you see the same situation of raw material price, same situation of input price, you are right. But it is very difficult to project those input prices. So that will vary the margin, but per kilo margin we will ensure, and if everything remains same, you are right, it will remain at the same level. But you can't promise that, because market changes based on the input prices and raw material prices.
Okay, sure, sir. Sure. And just one last question from my side. In terms of the decadent derivatives, just would want to know, obviously they will have usage in agrochemicals and pharma as such. Any other industry or anything where, you find a lot of growth for decadent derivatives in terms of end users? I understand that it's right now 40-50% is being imported and you are catering to the import substitution demand. So just wanted to know in terms of end user industry, decadent derivatives, where do you find it, being employed more and more? In India or overseas? Both.
So there are three key uses. One is the dyes and pigment industry, agrochemical and pharmaceutical. There is another industry which is coming up in diketene is the antimicrobial also, which is a value-added product. So, but you are right, currently we are servicing mostly with agrochemical and pharmaceutical, where the growth is projected to be very good because of the new molecules which are growing in agrochemicals. So our most of the volumes will go to agro and pharma, and some maybe to dyes and pigments. And also we are developing molecules for the second phase of diketene derivative, even getting into the other segments of end users.
Sure, sir. Thank you. That's all from my side. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Dhruv Rimrajka from Monarch AIF. Please go ahead.
Hi, good evening, sir, and congrats on a good set of numbers and the resultant CapEx announcement. So my question is, are there any plans for us to put up a captive acetic acid capacity? I know you have answered the question with respect to forward agreements. So if you can, clarify on this also, please.
No, we don't have a plan to make the investment on producing acetic acid for capital use, because that is not making sense. This acetic acid plant is very specialized food grade acetic acid. So therefore, this much volume which is actually currently required by market, we have entered into it, but we have no plans to make investment on acetic acid further for captive consumption.
Okay. Sir, one broad question. Sorry for my ignorance. If you can elaborate on how do we plan to take this pyridine chemistry going forward? What are the risks overall to pyridine chemistry, if there is anything which we see? If you can elaborate something on this chemistry part, that would be great for our understanding.
So, pyridine chemistry, as you know, we are the globally largest producer in pyridine and pyridine derivatives. Whatever the bad time one has to see in pyridine chemistry, we have already seen 5 years before. I can only tell you that pyridine chemistry is giving us much higher opportunity in future, and some of the explanation which I just gave you on agroactives and fluorinated derivatives, these are all coming out of our basic pyridine chemistry capability which we have been working for many years. So actually, this is giving us much higher opportunity now, rather than you are saying that there is a risk to the pyridine chemistry. And we have achieved a situation in last 30 years to be the cheapest cost producer in the world, and we are even selling to the Chinese market. So for us as a leaders in pyridine derivatives, we will remain in this business, and we will have our opportunities much higher in future as well.
Thank you so much, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Yeah. We thank you for joining us on this call today. We request you to contact our investor relations team for any further clarifications. Good evening, and thank you once again for your interest in Jubilant Ingrevia.
Thank you.
Thank you. On behalf of Jubilant Ingrevia Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.